Welcome to Breaking News to Trading Moves. We have a very clear mission today for you. We're going to analyze a key piece of news on the horizon, the earnings report from CrowdStrike. And then from there, we'll map out the potential outcomes for a whole host of related technology stocks. We'll look at who stands to gain and who might lose.
Exactly. And this report from CrowdStrike, that's ticker CRWD, is so important. And it's not because we're expecting bad numbers. Quite the opposite, really. Everyone is projecting pretty solid results. We're looking for, what, roughly 20% revenue growth and strong ARR.
ARR being annual recurring revenue, which is, a key metric for these software companies.
It is, but that's not the main story here. The story is the expectation that's already baked into its stock price.
And that's where the valuation comes in. I mean, the number that jumps out is that CRWD is trading at approximately 77 times its projected free cash flow. FCF.
Yeah, and for anyone maybe not familiar, free cash flow, or FCF, is basically the cash a company has left over after it pays for everything it needs to run and grow. It's pure profit potential.
So 77 times that number.
That 77x FCF metric is what really sets the stage for our whole conversation. To put that into context for you, that's nearly double the average for its software peers.
Wow, double.
So when a stock trades that high, the market isn't just valuing today's performance. It's pricing in a massive, uninterrupted stream of future growth.
It's what people call price for perfection. If it were trading at, say, 30 times, there'd be some wiggle room. But at 77, there's just no room for error.
None. A minor miss, maybe even just some cautious guidance for the next quarter, could trigger a sell-off that affects the whole cybersecurity space.
So CRWD is acting as a kind of barometer. We're not just looking at one company. We're really analyzing the market's appetite for risk in this entire high-growth software group. Okay, so let's break this down into two main scenarios. First, who benefits if CrowdStrike succeeds and actually validates that huge valuation? And second, who takes a hit if investors get nervous and decide it's just too rich? All right, let's start with the upside case. The bulls are proven right. What happens if CrowdStrike's earnings and their forward guidance meet or even beat these really high expectations?
Well, the first big theme the market would reward is what we call consolidation and platform leaders. So the immediate winners there are, of course, CrowdStrike itself, CRWD, and also Palo Alto Networks, ticker PANW.
Okay, so why do those two move together? I mean, Palo Alto Networks is sort of the established giant, while CrowdStrike has been the high-growth disruptor. What's the link?
It all comes down to the platform strategy. If CRWD shows resilient annual recurring revenue growth and really strong demand.
Even with all the market volatility we've seen.
Yes, exactly. It proves one key thesis for enterprise buyers, that security just works better when it's centralized.
So they aren't buying 20 different tools from 20 vendors. They're buying one ecosystem.
That's it. When CrowdStrike succeeds, it tells the market that big companies are consolidating their security spending onto fewer full-stack platforms. CRWD's platform is Falcon, and it has dozens of modules. If their management says, hey, customers are buying more modules, that's a direct win for the platform model.
And that positive read-through then helps PANW.
It helps PANW because they rely on the exact same playbook selling a broad integrated suite of security subscriptions. It suggests the whole industry is moving their way.
That makes perfect sense. Okay, so if security spending is healthy in general, that must flow to the next group of, well, must-have products. I'm thinking of the zero trust and identity vendors. Who benefits there?
You're right. If CrowdStrike's management comes out with strong commentary, saying IT budgets are robust and that security is mission critical, the market will cheer. It reinforces the idea that security spending is non-discretionary.
Can you define non-discretionary in this context? What does that mean for you?
It means that unlike, say, a project to upgrade your internal CRM system, which might get put on hold in a slowdown.
You can't just pause security.
You can't. If a board approves a big zero-trust rollout, they see it as an insurance policy. You don't cancel your insurance just because the economy is a little shaky.
And the companies that benefit from that thinking are?
That helps Zscaler, ticker ZS, and Okta, which is OKTA. ZS is all about zero-trust network access, making sure every connection is verified. And Okta is the leader in identity management, verifying who is trying to connect. Positive budget talk from CRWD gives both of them a nice tailwind.
Okay, let's get to the biggest theme in the market right now. AI, artificial intelligence. CrowdStrike has always positioned itself as an AI-first company. If they highlight AI as a main growth driver, Where does that investor enthusiasm go next?
Well, if CRWD's management really leans into AI-powered detection and automated response as key growth engines, investors who want a piece of that theme might look for alternatives.
Why alternatives?
Yeah.
Because they might feel CRWD is already too expensive after its run-up.
Precisely. They'll look for other ways to play the same AI security trend, maybe at a slightly better entry point. And that interest could flow towards Sentinel, ticker S, and Datadog, ticker DDOG.
Sentinel-S makes sense. They're often seen as the main competitor to CrowdStrike in that AI endpoint space.
They are.
But Datadog, DDOG, how does an observability platform fit into a security trade?
It's a great question. Datadog's main business is monitoring and analytics for cloud infrastructure. But a huge part of modern security is analyzing all the data DDOG collects to spot threats. They've been expanding their security products pretty fast, so if CRWD validates that AI-driven analysis is the future, investors realize DDOG provides the raw data needed to fuel that. It's an indirect way to play the same theme.
Okay, so now we have to flip the coin. Let's talk about the more challenging scenario. What happens if CrowdStrike sells off? Maybe management sounds a bit cautious, maybe they just miss that growth target needed for a 77x multiple, or maybe it's just profit-taking.
If CRWD pulls back for any reason, the very first thing that happens is what we call valuation contagion. It spreads across the entire expensive growth tech group.
We already know CRWD is kind of the leader of this expensive club, but who else is most at risk of catching that contagion?
The names you look to immediately are Cloudflare, ticker Net, and Snowflake, ticker SNOW. These are modern giants in cloud infrastructure, and they share a very similar investment story with CrowdStrike. High growth, high margins, and these massive forward-looking valuations.
So if the market suddenly decides 77 times FCF is too risky for the security leader, it starts questioning all the high multiples?
Yes. If CRWD stock falls on valuation concerns, it can trigger a broad D rating, which is just a reduction in the acceptable multiple across those other names. Net and SNOW both trade on very rich multiples. When investors want to reduce risk in high-growth software, they often sell the whole basket, and Net and SNOW are right in there with CRWD.
That's the big picture valuation story. Let's go back to the competitive angle. In the upside case, you said platform success helps PANW. Who loses if that platform narrative really accelerates?
If the market rewards a platform strategy, the ones who suffer are the specialized point solutions.
And a point solution is just a vendor that does one specific thing very well.
Exactly. They might be the best at, say, vulnerability management, but they don't offer that whole integrated ecosystem that Falcon from CrowdStrike or the platform from PANW does, and that makes them vulnerable to this consolidation trend.
So which companies are we talking about here?
The potential losers would include some of the smaller, more focused vendors like Tenable, ticker TENB, and Rapid7, which is RPD. If CrowdStrike comes out with a strong message about customers buying more modules and consolidating on the Falcon platform, well, that's a direct threat to these narrower players. Investors will start to worry that the platform vendors are just going to keep eating their market share.
They sort of become collateral damage if big companies decide integration is more important.
Yeah.
Okay, last thing on the downside. Let's revisit that idea of being priced for perfection. Even if the report is pretty good, who loses just because the bar was set too high?
This is a scenario that would impact CrowdStrike, CRWD again, and also Zscaler, ZS. You have to remember, CRWD stock has already had a considerable run-up into this report. If the results are just good but not a blowout, that lack of a fresh catalyst can trigger profit-taking.
Right. The short-term traders who bought for the event just sell the news no matter what it is.
Exactly. And because Zscaler ZS also trades at a premium valuation, it's highly tied to CRWD's valuation moves. When profit-taking hits the sector leaders, ZS often gets pulled down with it, just as part of a general move to reduce risk in the expensive cybersecurity names. It's not about Zscaler's performance, it's just about their shared valuation.
This has been really thorough. I think the critical takeaway for you, the listener, is just how interconnected this whole tech segment is. The outcome of this one earnings report from CrowdStrike, ticker CRWD, is going to serve as a key barometer. It's going to set the tone for the market's appetite for a dozen other stocks.
It will. And that leads to a final thought for you to consider. We noted that Zscaler, ZS, shows up on both sides here. It's a potential winner if spending is strong, but a potential loser if valuations contract. So given that high exposure to volatility from both directions, where does that place ZS on your priority list when you're thinking about the market's reaction to CrowdStrike's report?
That is the question to consider as this all plays out.
Please remember, the analysis provided here is purely the opinion of the author of the material reviewed. This is not financial advice or a recommendation to buy or sell any security.